And as you mentioned, bank earnings underway next week. For a quick preview of what to expect from the big financials, we're joined now by Yahoo Finance's Brian Cheung. And Brian, Jared talked about the banks as a key part of the market rally. But when you look at their business right now, and you think about what we are likely to hear from them on the consumer side, commercial real estate, residential real estate, what are the key things that you are looking for as maybe a signal of overall economic health coming from the financial sector?
Well, it seems like just based on the market action that Jared was highlighting there is a lot of optimism about the health of these banks, which might speak to something about their underlying businesses with regards to that U.S. consumer maybe being a little better than people would expect for this next quarter. Again, the second quarter, which the big banks will begin reporting next Tuesday. Now, the concern, though, is obviously going to be loan loss reserves, things like any sort of provisions that they would need to build up. We saw that being the trend in the first quarter when they reported back in April, and that trend is likely to continue when you consider that the deep impact of the coronavirus closures across the country were really felt in that second quarter. So a note from KBW saying that they expect a large reserve builds, although they do expect strong capital markets and trading activity to make up for that. Again, a trend that we saw in that first quarter. You had a lot of these companies with their loan pipelines not being as profitable, with net interest margins coming down, really relying on their trading desks, whether or not that's in fixed income or in investment banking, to really make that back up. So largely, they do expect the numbers to be pretty down in terms of bottom line earnings. They expect a 25% year over year decrease in earnings for the median bank for this quarter. But they do say that there could be some winners. So Goldman Sachs, they said, could be one winner, again, because of the fact that they have that legacy trading revenues that they've relied on in the past. We've seen them blow out earnings in previous quarters. So that's something that's definitely going to be worth watching. But again, the banks, when it comes to capital distributions, no surprises here, because we know that the Federal Reserve has to require these banks to undergo those stress tests, which they did. We already know what the capital distribution plans are going to be for most of these banks. The one that's worth watching is obviously Wells Fargo. They had already announced that they will be cutting their dividends, but we don't know exactly what number it's going to be. So when they do disclose those numbers for the next quarter, will be worth watching. But largely, you can see the bid that the banks have gotten since those lows in late March. We've seen the likes of Goldman Sachs and Citigroup up almost 50% since that point in time. That's beating the broad S&P 500, which has only been up about 40% since that time.
And then, Brian, when you think about the interplay, and you mentioned a little bit with Wells, I think that's probably a story for the next generation of Wells leadership, is their relationship with the Fed, what they can and can't do, trying to shake a lot of the problems that they had. When you think about the banks and the interplay that they have with Fed policy and where things stand right now in the recovery, you mentioned the bank stocks have done quite well. I think the Fed would be certainly content to not have to announce a bunch of new things, a bunch of new facilities or ways to try to grease the gears, as it were, of credit markets. How important, I guess, do you think it is for the Fed watchers and folks concerned about capital markets broadly to hear from bank executives to maybe affirm some of the stuff that the Fed has done in the last couple of months here?
Well, there are kind of two buckets that you can place the Fed's actions in, one being the monetary policy and then the other being the regulatory implications. The regulatory implications are fairly cut and dry. The Federal Reserve said after it released its stress test a few weeks ago that banks, A, can't be increasing their dividends beyond what they were already paying, although who's really going to be raising dividends during this environment anyway? And then secondly, they would be suspending share buybacks. Those are all going to happen. Those are restrictions for the third quarter. So that obviously will have implications. And also, though, the Federal Reserve is saying that the banks are in a resilient space. Keep in mind, they have a lot more capital than they did heading into the 2008 financial crisis. So the Fed is trying to say, hey, at least for right now, you guys have enough tier one capital to be able to withstand a shock. They've already largely have already. But then the second bit is the monetary policy. Those are kind of where bond yields are going. We have seen the curve steepen over the last few months. So that is something that would be net positive for the banks who lend long and then borrow short. So that is something that the banks will probably be pointing to. But again, largely when it comes to Fed monetary policy, its actions largely in providing liquidity to whether or not it's the municipal market, the corporate bond market. We just got new data today showing you exactly what the Fed's been purchasing at the end of June. Those are all things that are largely good for these banks who are market makers and rely on markets functioning properly, not just to make money, but to also survive at a very baseline scenario. So those are all things I think you'll hear those executives kind of harp on as they do hit those calls next week. But again, I think the real thing that's going to be worth mentioning is what can we glean from the U.S. consumer based on their metrics that they'll release next week, and then really what is the underlying health of these banks given the shock that they just sustained in that second quarter.
All right, Brian Cheung with a quick preview there of bank earnings coming up next week. Brian, we'll talk to you then as those results start rolling out. Thanks for joining the program. Have a great weekend.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.